Okay. Yesterday in Twitter, I asked ITC I want to buy, but it has already shot up from uh, 195 to 199. Earlier, I sold a lot of put options. In fact, I have already made about 7 rupees profit per share, which is about 21,000 plus. And now I want to see what I can do. I want to buy this at the lower level, but I don't want to buy one day ahead of the results. In case if the results are bad, if it falls 5-10 rupees, I can always buy at the lower price. I don't want to buy at the higher price. But at the same time, if the results are good, if the market goes up, then I lose the opportunity. So therefore, what actually I'm doing, for the last 3 months data I checked, the high made by ITC was 208. So it did not go above 208. So what I'm doing, I'm going to buy 197.5 call option, buyer at 640 because this is an odd figure. So I'm just putting at, maybe I put 2 lots at 5 paisa higher at 645. Now when I'm putting it, somebody is putting at even a higher price. Maybe I can put at, I can change this to 655. Okay, 655 bought 2 lots, and I'm going to sell 4 lots at 350. Okay, 2 lots got triggered, remaining 2 lots is yet to get triggered. Yeah, got trigger all. Let us look at the payoff chart. Abstract.defineH.com, option strategy builder. Okay, here ITC, we are dealing only in options. Strike price 197.5. Call option, we buy 2 lots. We add it. Price is 655. And then what we have done, we have sold 205 call option. We sold 4 lots at 350. It is showing 350 only. Okay. So first estimated margin is about 41,000, which I am not very sure. Let us double check with the zero the margin calculator. Until then we analyze this. So here there is no downside risk. Okay. So if suppose market goes down, I already sold some put options, I can take delivery. But if the market goes up, it goes to 205, that is where I get the maximum profit. So my maximum profit is about 50,000, and my loss begins only after 212.5. And because last 3 months ITC high is already 208, so the probability of going above 212 is very, very low. So if the market trades somewhere here, I will be able to book the profit, and then I will go long in cash market. So along with the profit that I made here, my cost price will be around 197.5 only. Market is already trading around 199, and we want to go long at 197.5 lower price. And after the result, if the result is not really good and knee jerk reaction, if the market comes down, we can take delivery because we are buying for long term. We are not buying for short term. We can buy, and in case if market goes, anyway I have already sold a lot of put options, that all will go to zero, plus I will get the profit here also, and then I will go long. Okay, F&O margin calculator, options, ITC, July 205, call option 6,400, 12,800, 4 lots. So we sold. Total margin is 4,98,000, but we are going to same call option 197.5. We are going to buy 2 lots. So it's keep on moving. Probably one reason could be because of this ITC more than 5% dividend, they have made a lot of changes to the strike prices. So the 197.5 strike price was introduced in between the month. So Zerodha, I think they have not updated in the margin calculator file. So that is why it is not coming. Okay. Now you see, if I close this and let us say if I put 195 and then you see it comes immediately. Even when I buy 195, the margin is showing around 2,31,000. So whereas the Upto, it is showing estimated margin showing 41,000, it seems to be wrong. So if I am not wrong, the margin should be somewhere around 2 lakh to 2.5 lakh. And our maximum profit is about 50,000 if the market closes somewhere around 205. So this is the overall picture. So first thing is that the markets are bullish, and if the ITC goes down, nothing to worry, and if it goes up, we will make profit. And the problem will come only if it goes beyond 212.5, but that is, as of now, that is a remote possibility. I am not buying any hedging, so because I am a slightly high risk taker, and where it is trading, wow, right now it has crossed 200. Okay, yeah. So let us see how we can do it. And unfortunately, I put, wow, this got triggered. 185 rupees put option I sold at 1 rupees 1.05. I thought it did not get triggered, so that also got triggered. It has come to 80 paisa. Okay, so if I add that into the Upto, 185 put option 2 lots 1.05. So and now see, if the market comes below 184, the loss. But anyway, I am prepared to buy. If it comes below 185, surely I will buy, because the dividend yield alone is more than 5% in this stock. Now my upper break even changes to 214. So in between, I make this profit. One disclaimer, and whatever strategies I am doing, it can go wrong, and please don't take this position without understanding the risk and reward. If you are taking position, you are taking at your own risk. I have already given my hypothesis, and I am ready to buy if it comes below, and if it goes above, I will be doing a lot of adjustment trade, and I will be able to come out without loss or with a minimum loss. So please don't take position without understanding the risk and reward, and please don't blame others if things go wrong. At the end of the day, it is your money, your risk, your reward. When the reward comes, you don't pass it on to others. So therefore, when the risk comes, you don't pass the blame on others. Thank you for watching.